Have buyer choices just peaked out in our marketplace? Well, we're going to talk about that and much more this week. Hi, I'm Tony Meier with Windermere Real Estate. For 34 years, I've been an avid study of the real estate market, helping our clients understand how to make moves and when to make a decision. We're going to share that information with you today. We're going to talk about rates for sale and pending, months of inventory, and median sales price. First up is interest rates. Well, Fed's raised rates a quarter of a point. It finally showed up in the market. We're up a little less than that quarter of a point, but we're definitely over 7. Not fabulous news. Our 52-week range, we're peaking out closer to the top of that. Active listings. Well, this is what I was alluding to in the opening remarks. Normally inventory at this time of year, July, would be 1,089. So that's what we would normally see. And since this week's numbers is mostly the end of July at 677, we're well down from those numbers. What you need to understand, particularly for buyers, listen up at this point. Inventory is likely to drop another 20% by October and down a total of 40% by December. So by December, we're going to have very anemic numbers and likely start off the spring selling season in a very, very competitive marketplace. So if you're hoping that more choices are going to show up, you don't like what you see, you probably ought to take a second look at what's out there for inventory because your options are not likely to get much better. Pending sales, we took a slight dip from last week, down 13%. We're also down from 2022. Market kind of paused a little bit, maybe the shock of rates going back over 7. It's a psychological thing. It obviously didn't cost much more than 6.9 the last week, but that is a psychological barrier that may stall some buyers out. Our months of inventory ticked up along with that at 1.28, but compared to a year ago at 1.92, we're still in a much better marketplace than we were at that point. Lastly, our median price. We did see a drop in median price this week, but the preliminary information I've got for July would show that we're going to be closing out on the east side at $1,469,000 or right in that range. Keep in mind, for the last 3 months prior to that, we stagnated at $1,450,000. So the market is surging ahead with more appreciation at this point. We're down just a slight bit this week from last year at 5%. And you can tell our market had made some significant adjustments last year to only be down 5% at $1,330,000. So if you've got questions about the marketplace, leave us a comment down below. Reach out to us. We're here to help you make a decision, make the right decision for you and your family. If you like what we have to say, hit the like button, hit subscribe so you'll be updated on our future videos going forward. Have a great week. Take care.